But we're not at 1900 or 2000 gold when I made that call. We're now going into that at 2500. So the reasons to be bullish on gold are still ahead of us. And by the way, the Fed breaking stump thing, it hadn't happened yet, but that doesn't mean it's not going to. So the way I see it is rate cuts alone are good for gold. Undeniable recession, that'll be good for gold. We may or may not get that undeniable recession. I think we will. We're at nominal all-time highs now. You start going way above that. I mean, a mere 20% rise from where we are now takes us almost to $3,000 an ounce.
A bullish outlook on gold, predicting prices could rise to $2,500 or even approach $3,000 an ounce. They argue that factors like rate cuts by the Federal Reserve and a possible recession, both typically favorable for gold, have yet to fully unfold. Despite already being near all-time nominal highs, they believe significant upward potential remains, highlighting the strong future prospects for gold investment. The speaker Lobo Tiggre, a well-known figure in the investment and financial sectors, particularly in the realm of precious metals and mining, emphasizes a highly bullish stance on gold, viewing it as a high-confidence trade, not just an investment, but as savings and insurance. They argue that even if the Federal Reserve doesn't cause a market disruption, the base case for gold remains strong, starting from $2,500 per ounce. While they consistently buy gold bullion for long-term savings, they see the real speculative opportunity in gold stocks. They believe the market outlook is either bullish, very bullish, or extremely bullish, noting it's a rare opportunity and personally investing their own money in this view. The speaker Lobo Tiggre suggests that gold's recent rise is driven by deep-pocketed investors, including institutional investors, family offices, and sovereign funds, anticipating economic risks. With global instability, including ongoing wars and financial uncertainty in major economies like China and Europe, these investors see gold as a safe haven. Traditionally, global portfolios have a 2% allocation to gold, but currently, it's only about 0.5%. The speaker believes this is starting to change, with more investors buying gold as insurance. Even before traditional economic drivers fully materialize, they are personally investing based on this outlook, expecting further price increases. Gold stocks haven't matched gold's price gains due to past underperformance, but recent strong earnings signal improving fundamentals. High barriers to entry and rising profit margins could attract investors, turning skepticism into opportunity as gold prices climb, potentially driving stock prices higher. For more videos like this, subscribe and turn on notifications. Thank you, and enjoy the video.
Some of these other things, banks marking things to market that they've been able to get away with not marking to market. If we have a reality check, we could still see the Fed break something. But even if not, the base case is still bullish for gold starting from 2,500. So, I'm not one for wild arm waving, but I am very bullish for gold. It is a very high confidence trade for me. Now, of course, gold bullion is not a speculation. It's not even an investment. It's savings, it's insurance, it's real money, and it's how I save money for the future. I'm not talking about that. I always am in the market for bullion whenever I have extra money that I want to put away for the long term. I'm talking about speculating on gold stocks. And so for that, trying to project where the market is going is very important. And I just see it as either bullish, very bullish, or super bullish as being the options. And it's very rare that you get an opportunity like that. Can I be wrong? Yes. But I'll tell you what, I'm putting my own money where my keyboard is on this. It's fantastic that central bank buying, and I think other whales, other deep-pocketed investors have moved into gold. I think I may have said this, I don't know if I've said this on your show or not, but my explanation for why gold has gone up before these other factors came into play is that I think people are starting to read the tea leaves, and not just gold bugs, but like more deep-pocketed institutional and family offices, even sovereigns around the world. And I don't just mean central bank, I mean funds. They're stocking up on gold. We got two hot wars, either one of which could become World War III, and the global financial order is in disarray. The American exceptionalism makes it seem like it will take more proof before recession becomes undeniable. But China's in trouble, Europe's in trouble. With those two big markets in trouble, the rest of the world feels, they're looking at risks. And so, Rick Roll's famous thing about global average over the decades as being like 2% allocation to gold, and it's only 0.5% now. I think that's what we're starting to correct. I think more people are starting to say, they're not becoming gold bugs. They're just saying, you know what, I have no gold in my portfolio. Would it hurt to buy a little as insurance? So I can't prove that. This is my theory for what happened earlier this year, why gold went up without really the economic drivers to make it go up. But now those economic drivers are coming into play. So I do think we go up from here. Yes, that's a forward-looking statement. Yes, I can be wrong, but that is what I think, and that is how I'm speculating with my own money. The gold stocks, even with the indices, they have responded to gold. They haven't delivered the kind of leverage we'd like to see so far. There's a free article on my website called Are Gold Stocks a Broken Asset, or Are Gold Stocks Broken, or something like that. It's a free article you can search for on the website. But I make the point that, and this is also a Rick Roll thing, in some ways the industry deserved the discount. They failed so spectacularly to deliver for shareholders in the early aughts, right? The ramp up from 258 to 1911. Gold from 2001 to 2011, right? They failed so spectacularly to succeed in the actual business of mining gold and making money for shareholders that it's not unreasonable for investors to look at them with skepticism now. And so that's another interesting thing, and I think a particular source of opportunity, because the stocks and the companies facing the skepticism, they have not really moved as much as we would think, expect, or hope as speculators, but I think they will. In Q1, we had the biggest gold producers in the world. They all beat expectations. We're into Q2 now, and we're starting to see good results too. So I think we're getting to the point where even the Warren Buffetts of the world could look at the gold mining business and say, I get it. That makes sense. They have these producing assets, the margins are increasing, and there's a huge moat. It takes years and years and years to explore, permit, build another gold mine. So it fits, in my view, that Warren Buffett-y sense of looking for a great business that competition can't just jump in and swamp them out. And in a context where, if I'm right about gold itself going up, then that moat is highly relevant. Your competition, let's say even if you have a mothballed gold mine, you're an existing miner, you've got the know-how, you've got people on staff, and you can go back into production lickety-split. Well, in the mining world, lickety-split means like 6 months or a year. So, that moat is tremendous for the people that have the goods now, the profitable miners. So I think we're in a situation where we may see that skepticism about the gold miners and the gold stocks.
Lobo views silver as a win-win metal with both monetary and industrial appeal, especially in an inflationary environment and with green energy demand boosting its industrial use. Recently, silver has tracked industrial metals like copper more than gold, but is starting to align with gold again during geopolitical events. Although silver hasn't reached new all-time highs like gold, its changing industrial role makes it behave differently from past cycles, creating some uncertainty. The speaker is currently more confident in gold due to lower perceived risk, particularly ahead of a potential recession, but plans to focus more on silver stocks afterward. Meanwhile, the speaker Lobo Tiggre is highly bullish on uranium due to strong global demand from nuclear power plant construction, especially in China. Despite increasing production, supply struggles to keep pace with demand. Mining challenges and a robust push for nuclear energy support a bullish outlook for uranium.
Silver will actually ever go back into circulation as money, since digital receipts solve the problem of making change for gold. I'm not sure that it will, but set that aside. We can let history decide that. Silver has been acting more like an industrial metal. Clearly, its industrial use case has changed, and it really exploded. I actually see this as a good thing. That hasn't made it stop being a monetary metal or a safe haven asset. It still works that way, but it also has this other possibility. I think on the other side of the recession, once we're sure that any potential downside due to the industrial side is off, I see silver as the win-win metal. I think both the monetary and industrial aspects in an inflationary environment where the powers that be are blasting with the money bazookas left and right, I think silver does really well. Oh, and by the way, it's an essential part of the green agenda too. So whether you like that or not, it's happening, right? And it's another tailwind that really doesn't affect gold, but is a tailwind for silver, big time. All of that said, last year silver did correlate more closely with copper than gold. That's just a mathematical fact. You can do the numbers and look it up. The good news is that silver has been tracking gold more again this year, particularly on, it's interesting to me, on like geopolitical events where fear makes people go into the dollar and gold at the same time. Silver tracks gold then. So the world is still treating silver as money, which is good. But it has been underperforming, right? We keep getting nominal all-time highs in gold, but we haven't had a new nominal all-time high in silver yet. I was just talking with David Lynn, and he showed me a chart where it looked like silver was correlating more with gold than I had thought this year. But in the last couple of months, the alligator jaws have opened. So no matter how you look at it, there is data out there that tells us that silver is behaving differently than past cycles, and its industrial side is changing its trajectory. So in that context, it makes me a bit nervous. I still like it. I'm still bullish. I'm still willing to buy a great silver stock if I can find one. And that's the hard part, the finding a great one. But I have to say I'm more confident in gold. I see it as less risky in front of the recession. After the recession, I expect to have a greater emphasis on finding more silver stocks in my portfolio than gold. But right now, in front of the recession, I'm trying harder to get more gold in there than silver. It's not in any of the existing uranium supply and demand models, and I think it's extremely bullish. But let's say it's all a bloat of dingo's kidneys. Tomorrow, Intel invents a super energy efficient AI chip that just puts NVIDIA out of business or something. Who knows? Let's say it all changes direction. We're still building nuclear power plants, as fast as we possibly can. Just recently, China, which is already building scores of them, announced 21 new reactors. This isn't just an idea or this is we're building these more. So it's just boom. The demand side, I sincerely think it would take a Chernobyl scale event to derail the demand side. Meanwhile, the supply side is still taking time to sort itself out. Yes, high prices cure high prices. Yes, that's happening now, this year, right now, as you and I speak. Existing producers are ramping up production. Mothballed production is coming back online. Low-hanging fruit of high-margin projects are being built. This is all happening right now, but it's not enough. Even if it was all done completely according to plan and on schedule, on budget, and all that stuff, it would not be enough to meet the demand. And it's not going well. I mean, mining is a crappy business, really. Doug Casey famously calls it a crappy 18th century choo-choo train industry, right? It's so difficult. Even when things go well, it just means relatively well, right? So, the best and most experienced uranium miners in the world are having trouble.
There is significant investment opportunities in gold, silver, and uranium due to strong demand drivers and market dynamics. With economic uncertainties and shifting global priorities, these assets present unique opportunities for those looking to hedge against traditional market risks. What factors could potentially derail the bullish outlook for gold, silver, or uranium in the near future? Share your thoughts on Lobo's insights in the comments below. Don't forget to like this video, subscribe to the channel, and turn on post notifications for more content like this. See you next time.